Hey, what's up guys? Lane Rogers here with Z&R Realty, and today I have the latest information about the residential real estate market across the country. And what I'm going to do is go over that information with you, and then I'll tell you what I think about it. Hey, if you like real estate or real estate related topics, go ahead and hit that like button and feel free to subscribe. And while you're here, go ahead and turn on your notifications because a lot of the information that I share is time sensitive and you're not going to want to miss out. So guys, this is the last market report of 2021, and let me just tell you, it's been a phenomenal year in real estate. We've seen a lot of great things in the market. We've seen a lot of price appreciation, and preliminarily, we're seeing that everyone's predicting that 2022 is going to be another great year. And so what I'm going to do is I'm going to go over each one of these slides with you and kind of just tell you what I think, and then we'll just wrap it up at the end. All right, guys, let's get into it. So as you look at this first graphic here, I just want to pose the question to you, when do most homes come on the market? Well, in a normal market, as you can see here, your April, May, and June, which is what we typically see each year in a normal, real estate cycle, your normal real estate market. But all that really has been thrown out the window since the pandemic. And so what we're seeing right now is just every single month, it's just busy. So the reality is the real estate market right now is anything but normal. And what we're expecting is that more people are going to be listing their homes this winter than at any other time in the year. So like I said, the seasonality in real estate has really been thrown out the window. So if you look at this, it says that home sellers have historically moved when something in their lives changed. A new baby, a marriage, a divorce, or a new job. The pandemic has impacted everyone, and for many, this became an important impetus to sell and make a housing trade. And this is Jessica Lotz for a VP of Demographics and Behavioral Insights at NAR. So as you can see, life change really drives the real estate market. No doubt, seasonality and all these things that drive our business still do in some respect, but the pandemic caused people to say, hey, we need to make a change in our home, we need to change something about our home, and we need to do something a little bit differently. So it's those different home buying decisions that we're really seeing the results of now. It goes on to say, the pandemic likely spurred occupants to shorten their home stay as tenure in the home decreased to 8 years from 10 years, according to the report. This is the largest single year change in home tenure since NAR began collecting such data. And this is really notable because I remember personally back, before the housing crisis, before the 2008, 2009, those years, we thought that, most people would stay in their house 5, 6, 7 years. That was sort of the norm. And then after the housing crisis, we saw that number go way up to, around 10, 11 years, something like that. And it's good to see those numbers are starting to come back down. So what does this mean? It means that people are moving more often, and it's getting back to kind of that norm of the frequency of what people used to do as far as how often they moved. So this is what it kind of looks like graphically. So if you look at right here, you see that today's homeowners are staying in their houses for an average of 8 years. And if you look back at 1985, it's 5 years, and then it kind of, 1997, it goes up to 7, but it stays around 6 for all those years up until 2009. It goes back to 7, and then after that, it just keeps going up until around 2014. It was like we hit about 10 years, and then kind of bounced back and forth from 9 to 10 until 2021, and now we're back down to 8 years. And so that 10-year in housing is definitely coming down some. And a couple of reasons people may have been staying in their homes longer during those years is that maybe they didn't have enough equity to move, and maybe they were upside down on their loan. And we did see others saying, I'll just stay in this home and pay it off. So why is this important? Because it means that we have a ton of built up seller demand for all those homes sellers stayed in for all those years. And you know what else? It means that sellers have more equity in their homes than ever before. So let's take a look at what George Ratui from Realtor.com just said. He said the pandemic has delayed plans for many Americans and homeowners looking to move on to the next stage of life, and that's no exception. Recent survey data suggests the majority of prospective sellers are actively preparing to enter the market this winter. And a report says 65% said they have either just listed or plan to list this winter. 93% say they've already taken the steps towards listing their home, including working with an agent. 36% have researched the value of their home and others in the neighborhood, as well as started making repairs or doing what they need to do to sell their home. So I'll wrap up this section with this. Listings rose for the second week in a row, with our recent survey data suggesting that a growing share of homeowners are potential sellers, eager to find new homes. There is a reason to believe this may be the start of a welcome trend, especially as we move into the colder months. And that's Daniel Hale, Chief Economist at Realtor.com. So guys, just like I said earlier, there's a lot of sellers out there that are thinking about getting into the market. You know, they're thinking about making a move, thinking about doing something with all that equity they've built up over the last few years in real estate. And so I think, in 2022, we're going to see a huge surge, especially in the winter months, of sellers coming on the market. And then I think that will just continue throughout the year. I don't have a crystal ball, but unless there's some major big black swan world event, I think 2022 is going to be another fantastic year in real estate. And we'll have to just wait and see. But everything is kind of looking like it's going to be a great year. All right, guys, let's take a couple of minutes and talk about interest rates. I know that's one of the topics that's probably on everybody's mind out there. What are interest rates going to do in 2022? So let's go over that. So the overall outlook is that interest rates are going to rise some in 2022. But if you look right here on the graph, you see that interest rates were knocking on the door of 4% back in January of 2020. That's kind of pre-pandemic. And right now, they're kind of hovering right around 3.1%. If you look right here, going all the way back to 2018, interest rates, getting up closer to 5%. I'm not quite sure they're going to get that high, but I do think we're going to get much closer to, what they used to be. So really back to those pre-pandemic levels of interest rates, somewhere around 3.5% to 5%. So this graph really gives you some interesting perspective. You can look back all the way to 2000 here with the line graph, and then it goes all the way up to 2020. And you can see really home prices aren't affected that much by rising interest rates, except for during the housing crisis. So we don't really see rising interest rates cause any depreciation. And Mark Fleming really sums this up best. He says that house price appreciation is resistant to rising mortgage rates, primarily because most home sellers would rather withdraw from the market than sell at a lower price, a phenomenon we refer to as downside sticky. So really what he's saying here is that if you think about a home seller who's not getting what they want for their home, or maybe it's just not appreciating as fast, or whatever the reason is, they're just going to say, okay, I'm just going to pull the home off the market, and so not sell it at a lower price. So this means we really don't see depreciation in the market, and we only see a slight impact to home sales. And as you can see here on the graphic, going all the way back to 1989, the line graph being interest rates and the bar graph being home sales aren't really impacted by rising interest rates. So those rising rates just aren't a big factor. So some people out there might say, okay, if interest rates go up, home sales will be dramatically affected. And, my question is, according to what? Because if you look back historically, it simply doesn't play out. All right, folks, just a little bit more and I'll wrap it up. But first, let's take a look at this quote here by Mark Fleming. Context matters for purchase demand. The economy is improving and millennials continue to age into their prime home buying years in large numbers. So the context remains good for the housing market. So as you can see, after looking at all these graphics and all this data, everything's really looking good for 2022. And what do I think personally? I think that we're going to see interest rates go up some. It's going to cost more to buy a home, so you kind of need to expect that and kind of build that into what you're doing. But I don't think it's going to affect the housing market dramatically. And so I think 2022 is going to be another great year in real estate. All right, guys, that's all I got. As usual, do the thing, like, share, comment, and subscribe, and I will see you on the next video.